Hello, everyone. Hello, hello. Sorry for being a little late. We're just having a little technical issues on my end. Just waiting for people to know that we're here. Got a great guest today, man. I know everybody's going crazy with the 2 million GL. Everybody want to know what's happening. Give me 1 second, guys. Let me pull up some notes. Hello, everyone. Hello. In just about 2 minutes, we'll get our guest in. Just checking in some emails here, guys. Just give me 1 second. Oh, it's about 7:04. Let's just give it about 1 more minute to get everyone in. Hey, Robert, I see you. Just give me about 2 seconds. We'll bring you live just now. Hello, everyone. This is once again yours again, Pierre Laguerre, founder and CEO with Trucking Weekly. Every Thursday. So we missed you guys last week Thursday. Was doing some traveling, so really didn't get to do the show. But we back here this week, and we have one special guest, Robert Hayley, at USI Insurance, and definitely going to get into the details of general liability insurance that we need. I know there's a lot of entrepreneurs out there that also want to own trucks. A lot of owner-operators that want to actually multiply their fleet and grow their businesses, and too often insurance usually be a big problem, and it's making it hard for for the small guys to actually get to a position where they can compete with the bigger players. So we have Robert Hayley here, so I'm gonna bring Robert on. Welcome to Trucking Weekly. Robert, hold on, I'm bringing you in right now. Rosie, how you doing? Robert,
How you
how's
doing?
it going?
Thanks for having me on.
Thank you for being on, man. Really appreciate you taking the time. I know you could have been out there covering a lot of different companies, a lot of trucks, but you're here to take the time to really educate our audience. Exactly, the things that they need to understand with insurance, what's happening, where the insurance industry is going, and where they need to be, in order to save costs, to find the best policy, and to stay safe on the road. So really appreciate you taking the time. Everyone here, this is Robert Hayley from USI Insurance. So Robert, before we just go into the weeds, why don't you give the audience a little bit about your background, how you got into trucking, and how long you've been doing the insurance aspect in trucking?
Yeah, absolutely. So my family actually owned New York's oldest trucking company. We started in 1919 with horse trucks servicing the printing industry in downtown Manhattan. And I grew up in the business. I was backing trucks in our terminal in Williamsburg, Brooklyn, since I was probably 7 or 8 years old. And I just grew up in the trucking business. Finally, we moved to Jersey City, where we had a cross-dock terminal with about 30 trucks, and we're doing intermodal, cartage work, LTL, and drayage. So that's my background in the trucking business. I also have a college degree from New York Maritime College in transportation. So extensive trucking background. I've worked for companies with 500 plus trucks, and I've also worked for my father. I've drove trucks and done everything from working on the loading dock to managing a fleet. So you name it, I've done it in the trucking business, and I'm still a young guy.
Thank you for sharing that, man. Really appreciate it. Now, before we even go into further, because this always happens, every time we bring a guest onto the show, we find out, they did go to college for something else, but ended up staying in trucking, right? So technically, there's something there in trucking. So for you, from your experience, what is it that make you stay in trucking? I'm pretty sure it's a very competitive market. It's very hard. But what is it that make you stay in trucking to still be in trucking till to this day?
So it gets in your blood, right? So like from the first time you hear like a diesel engine start up in the morning and you feel that action and everything pumping, you get addicted and you get sucked into that business. And no matter where you go and what you do after being in a trucking business, you still have ties to that, and you still just want to be around that, and you want to help people that are in that situation, because they're moving at a million miles a minute, and sometimes they don't even have time to stop and have their cup of coffee for the day. So it's up to guys like me to help them run a solid operation.
Thank you. That was great. That was a great alley hoop, man, to go straight into the topic of, how do we help these drivers? Like I said, they're doing a million things. They really don't understand unit economics. They're not too really familiar with the insurance market, let alone build relationships. Like, what is it that you can say that truck owner operators should really look into when either one, when they're getting ready to buy their first truck, or two, if they already have a truck and they want to start growing their fleet?
So a lot of people, and especially the owner operators, a lot of times I get asked by these guys like, "Hey, my friend only pays X. Why am I getting charged X?" And there's a few different reasons for that. And everyone thinks, well, I just have one truck and they have one truck. What's the difference? The insurance carriers are actually able to go and really dive into your company's safety culture, even as an owner operator. They have this software called CAB, which is from the Central Analysis Bureau, which is pulling data from several different sources, one of them being the Federal Motor Carrier Safety Administration. So they're able to go in, they're able to look at your company's safety culture, and that's what they're looking at first and foremost when they're coming up with your rating. So if you've had some bad inspections, that's really going to hurt you on your insurance pricing. Secondly, they're looking at you as a driver. Secondly, they're looking at your loss runs. So if you've had any accidents, that's what they're looking at second. So if you've had accidents in the past, that's going to drive up your rates. And thirdly, they're looking at you as a driver and the accidents and experience that you've had behind the wheel. So if you've never driven a truck before, or you've had a DWI in the past, or you just don't believe in doing a pre-trip on your truck, your insurance costs are going to be a lot higher than a guy that's been driving for 20 years, hasn't had an accident, and all of his safety scores have come back perfect.
Perfect.
And as a new venture company, they don't know what type of operation you're going to be running. They don't know if you're going to be good, bad, or ugly. Especially if you're growing, that's really going to scare them.
Wait, hold on. Let's stop here real quick. I think this is very, very important right here. I think you give the tips on exactly what the existing drivers, what they need to look out for, making sure that they take care of their license, making sure that they run a safe operation. And that's as far as with their equipment, the driver behaviors, speeding ticket that they're receiving on their license. Those things are key to make sure that a driver keeps his insurance low. But you're about to get into the real detail, the real weeds of the new entrepreneurs, the new drivers that was now getting ready to become an owner-operator that wants to own a truck, or that entrepreneur that wants to own a truck. Let's talk a little bit more about those challenges for those people and why their insurance usually be very high as soon as they start.
Yeah, exactly. So as I was saying, like, they don't know how you're going to run that company, so they really have nothing to base their rates on. So that they're looking at, industry standard of where's our loss runs been the past few years. So if you look at the trucking industry insurance sector over the past 5 years, every year they've lost money. Now, it started off as like they lost 7 cents on the dollar. I think we're down to, for every dollar new business and insurance carrier writes in the trucking space, they're losing about 2 cents on the dollar. So even though you have really high costs of insurance, especially as a startup, the insurance carriers are just not making money, but because the claims are so high. And what's driving that is litigation. So years ago, if you had an accident, people would want to settle outside of court. Right, so that the first thing that the lawyer would want to do is they would want to settle that case outside of court. They wouldn't want to drag it on for several years, bring it to trial. Now, private equity companies have gone into that field and they're funding litigation. So because they're funding those court cases that used to settle for $100,000 are now settling for $400,000 or $500,000. Wow. And it really depends on what type of jury you have. Wow. So that's just a major shift in what's going on in the industry. And that's causing the rates to go up for truckers. They're looking at the safety scores. If you have vehicle maintenance issues and you had 10 brake inspections and you failed all of them, and you have a rear end collision, the plaintiff lawyer is going to look at that and say, hey, look, this guy, he obviously had brake issues. He obviously knew he had brake issues. Why are we insuring this guy?
And that's exactly what's going on now, and I think that's what's making it very hard. Now, I'm not sure if we put that into the question that we were talking about. As we see the FFCSA, that's a kind of like off-the-wall question. I'm not sure if you can talk about that, and if you can't, it's fine. You can say you can't. With the new FMCSA trying to up the insurance to $2 million, what do you have to say to that? And what do you think is the cost of driving that course to $2 million?
So, quite honestly, from an insurance professional standpoint, $1 million is not enough these days. It's the claims are settling for way over $1 million. Everyone remembers what happened with the Walmart case and Tracy Morgan, and what that settled for. So, cases are what they call nuclear verdicts, which are verdicts that are settling for over the insurance amount. and they're becoming standard in this industry because the trucking industry, you have assets. You know, you may not have a ton of money in liquidity, but you always have millions of dollars worth of assets. And, you know, depending on what judge you're going to get, they're okay with liquidating your company to make sure that whoever you hit is going to get paid.
Absolutely. So once again, so now goes back again. What is it that drivers need to understand? I'm sorry. Before I even go off to that topic, is what is it that, how you think, is that a fee going up? Who is it going to affect? Is it going to affect existing mega carriers, or is it going to affect the smaller guy?
It's going to affect everyone. The motor carriers now, the larger guys usually have higher limits of insurance. They're usually buying umbrellas. The umbrella market in insurance right now is what they call a hard market, just like trucking is. So in years past, there's two different types of insurance markets. You have a hard market or a soft market. A hard market is when insurance carriers are not competing for your business. They're giving you the rates, they're giving the terms, they're driving the insurance costs. A soft market is when everyone's making money and they're trying to bring in more business because the insurance carriers themselves are making money, and they're trying to bring in business. And that's not the case. So right now, it's more important than ever to have the right broker representing you in the marketplace, because if they're not sending out that application to make you look as good as you can and as best in class as you can, it's doing your company a disservice. You know, I've had several times, you know, even over the past few months, where applications have been denied for other brokers, and I've had to step in and change it and explain it because they just weren't, you know, they'll send in an application and loss runs, but they weren't explaining the company. They weren't diving into that detail of their safety culture. If they've had certain issues, why they've had those issues and how they've overcome them. So looking at how they predictively should be running in the future is also as important as sending them their information from the past.
Thank you, man. So pretty much what you're saying is getting yourself in trucking, we already know it's very challenging, but it's very imperative that you have the right insurance broker to make sure that you can find the best rate with the best insurance company. But while we're into this conversation, I mean, I know we didn't go to it early on. So can you give us like an overview what type of insurance a motor carrier or owner operator need to have to kind of have a more efficient and safe operation?
Yeah. So, you know, the first thing to have by law, a general freight carrier that's $750,000 of coverage. Most people carry $1 million on the auto liability, and then you would it behoove you not to have a cargo policy. Most people carry $100,000, but specifically on the cargo policy, they're not all the same. So like you can't really shop by price. You want to shop by price, but when you realize that there's a lot of things that are excluded inside of these policies, you know, the difference between like the least expensive cargo policy and the best cargo policy you can get for your company is probably only a difference of a few $100s per unit. Yep. But the coverage is completely different. So take, for example, if you're a reefer carrier, right? And you know, just picture this in the back of your mind, because it's something that all of you guys have done. I've done it myself. You go to a food manufacturer, you pick up a load of, say, Hostess products. You pick up a load of Twinkies, right? You go to Costco, right? And the 2-cent seal is not on the trailer, right? It fell off the trailer. Something that happens, they're 2 cents. You know, they're not using those high security seals. So you go there, and Costco refuses to load because they can't guarantee the quality of the goods, right? Now you say, all right, I'll bring it back to Hostess. They'll take it back. Hostess is not going to take that back. They can't guarantee that load hasn't been tampered with. And if you have a standard cargo policy, they're going to say that and the first word of anyone's cargo policy is your policy is going to cover a direct physical loss. Now, this isn't a physical loss. All the boxes are sealed. Nothing's happened. So if you don't have that right cargo policy and you're a food carrier, you're gonna end up paying for that load, and not only end up paying for the load, you're gonna end up paying to dispose of that load. You know, so that's something that happens. It's something that I've seen before. It's happened to me when I was in the trucking business. We actually ended up making, I think, like 20,000 Easter baskets,
Wow.
out of those things, and every trucking company and over the road driver that came in to pick up a load off the loading dock ended up with a box of donuts. So it's something that I didn't know a lot about when I was in the business, but now being in the risk management business, I see how all the pieces work together, and I see the inner workings of a ton of different operations and what works, what doesn't work. And just having a regular insurance broker look at this stuff, it's not helping your company. You want a specialist, and you want someone that's gonna, he's gonna offer you the cheapest policy, but he's gonna explain the differences in what you're getting and the coverage that you're getting. Reefer breakdown on that. There's so many things that are involved in these. The policies are not all the same. And if you're talking to a run-of-the-mill insurance broker, he's going to insure a barber shop, and then he's going to try and sell you truck insurance. He sees dollar signs, but he doesn't understand that, he doesn't understand what's inside those policies. And you're not going to understand what's inside those policies unless you're an insurance broker or you've had a ton of claims. And you don't want either.
See, there you go. No, thank you for that. So, hey, everyone, I know if you guys are listening, so that means as much as important it is for you to make sure that you have a good truck, it's equally important to make sure that you have the right partner that can help you find the best insurance. And this is exactly why we bring you the best of the best to give you the insight, what you need to do in order to make the best decision. When we talk about the insurance, Robert, let's talk about a little bit about the workers' comp, the occupational accident that, if I own one truck and I own or 3 trucks, the workers' comp proportion of it, because I know that's right here is another uncharted territory for a lot of people. We don't understand workers' comp. We don't understand occupational accident, how that works. Can you kind of explain between both two, what is the difference between workers' comp and occupational accident, and why both are desperately needed?
So, a lot of people that I talk to, especially newer trucking companies and guys that don't have large fleets, if they're running in the Northeast, workers' comp is actually very expensive. It adds about 20% to your labor cost, maybe a little over 20% to your labor cost, and that's being paid for by the employer as a W-2 employee. But what most fleet owners don't realize is workers' comp pierces right through the corporate barrier. So if you're an owner of a corporation and you don't have workers' comp, and you're paying your guys, even if you're paying them on a 1099, they could be considered employees depending on how you treat them. If you're telling them where to go, if you're telling them how to do it, if you're telling them the order to do it in, if you're paying them by the hour, there's a lot of different factors that's going to make the difference whether they're going to be considered an employee or an independent contractor. So a lot of people say, well, I'm paying my guys on a 1099. They're independent contractors. Well, that may not be the case if you end up in workers' comp court, and it's not only your company and the company's assets on the line, it's everything that you own personally. So it's important to make sure that there's a real discussion around that and that you have that right coverage in place. Now, occupational accident insurance is a like coverage to workers' comp. Okay. So it's not exactly the same as workers' comp, but the coverages are the same. So workers' comp and occupational accident, if you're an independent contractor, you can buy occupational accident insurance if you're driving your own truck, and you'll have coverage to keep a roof above your head if you get permanently or partially disabled on the job. And it's going to pay you for a specified period of time, a specified amount of money. Workers' comp is the same way. But the limits on each are different depending on which policy you buy. So they're very similar. The difference in pricing between workers' comp and occupational accident is about half the cost. So if you own your own truck and you don't want to buy workers' comp for yourself because you can't afford it, but you're worried if you get hurt on the job while you're working, you're not going to be able to pay for your mortgage and everything else, and you're worried about your kids and your family, then occupational accident might be a good thing for you. It doesn't cost you a ton of money, and you have some sort of coverage in place. It's not traditional workers' comp, but it's pretty good. It's a pretty good secondary, especially for the price.
Absolutely. No, definitely agree. Hey, owner operators, if you're out there listening, you have that 1 truck or 2 truck. I know it's very hard for drivers to get on workers' comp. Definitely really should look into the occupational accident. I think that's something that even me, when I was an owner operator, when I even got into an accident, I got injured myself. If I had that, I think I would have been in a better position financially at that time. So I think it's very important that truck drivers know the difference and they need to have those coverages to at least, because that's the thing with trucking, right? Things happen every day and you just don't know when that thing is going to be you, and you're going to need those coverage to make sure that you stay alive. So that's really great to really cover on that. So let's get into the next question, Robert. So let's talk about how can having the wrong insurance have an impact in your business or break your business?
I'm sorry, I missed that. Can you say that one more time?
No, saying how can the wrong insurance plan can pretty much kill your business, have an impact in your business on a negative way?
Oh, as I said, if you don't have the right coverages in place and you have a claim and something happens, just because you didn't know weren't covered for that doesn't mean you're not on the hook for that. So if you don't have the right coverage in place and someone sues you or you cause an accident or something big happens, you're probably going to have to end up figuring out how to pay that out of pocket.
Absolutely. Like I said, ignorance of the law is not an excuse, right? So this is why it's always best to put yourself around people that have the information that can help you make the best decision. That is very true. I'm sorry to cut you off, man.
Yeah, no problem. That's just what I'm saying. There's a few different ways of handling risk, and I talk a lot about this. So if there's first way you don't have any risk is you just never get in a truck and drive anywhere, but that's not going to happen. The second way is you buy insurance, so you take the risk from your balance sheet and you put it on an insurance carrier's balance sheet. And the third way would be making sure that when you're signing these contracts with these large logistics brokers and everything, really looking at those contracts to see, are they putting their risk on me or am I putting some of the risk on them? And if you're looking at them, you may figure out that they're dictating, what's going to happen in a claim, which is going to drive up your insurance premiums as well as maybe make you exposed if you don't have the right coverage in place.
And I can tell you 90% of our own operators probably don't even pay attention when they're leasing on to those third-party logistics and just kind of sign on. Because like I said, like you remember, they're moving at a million pace. They want to get things done and they want to start working. So a lot of times, they don't have that true partners that can help them make those decisions. And that's why we're here, man. That's why Feeding is here. We want to help our drivers. We want to help our communities get as much education that they need to know about the insurance, what they need to do to stay safe, to make sure that they run a sufficient and, a safe operation. So let's get into the next question.
You guys are...
Go ahead.
I said you guys are disrupting the industry.
No, not yet. I mean, I think with your help, with the knowledge that you've been able to bring to the team, as far as, everything you've been helping as far as understanding that entire insurance on a tech perspective is absolutely amazing, right? Because at the end of the day, I think by far out of any insurance companies that we've spoken to, that we've known in the space, you're by far the only guy that understands the insurance aspect and also understand how do you incorporate tech into that as well and bring more value into the space. So really appreciate the value that you've been adding to us in the team, Robert. Really appreciate that.
I appreciate that.
Yeah, so let's get to the next question, right? It's not maybe I asked this question before. What are some misconceptions people may have about the insurance industry or insurance coverage in general?
So a lot of people are usually, I get a lot of objections with time frames, and price. So a lot of people think that the broker themselves, when they call them, are rating the policies. We're not physically back there rating the policies. I mean, sometimes we are if it's a one truck guy and we're going to Progressive, we have the ability to rate online, and there's a few other carriers that, for the owner operators and the 1-2 truck fleets, we could rate online. But the majority of it is pretty actually old school. We put together a submission, which, includes, probably 15, 20 different pages about your company. And then we're writing a narrative about your company and why you guys are the best and how you guys are doing business. And then after that, we include that with the loss runs, and then we'll show, analytics and stuff on the loss runs. And we take all that information and we send it off to an insurance carrier. And once it goes to the insurance carrier, it physically goes to an underwriter's desk, which could take a week, 2 weeks, 3 weeks. They're actually really busy, so they're putting out the fire in front of them for who's going to go out of business next and doesn't have insurance. So that's why it takes a long time. And then they rate it up, and if they have any questions, if you didn't give them information, or they look at something and they question it and have another question about that, then they're coming back to you. It goes back on the bottom of the pile, and then they don't touch that file again for another week or two. You know, so it's a pretty archaic way of doing business, but that's how it's done.
Absolutely.
And if there's a driver that doesn't fit into their box
Mm.
of what they're allowed to underwrite, then it has to go up to management. You know, so it's not even the underwriter's decision at that point, and that happens all the time. If you have a guy that doesn't have the right amount of experience, or the insurance carrier is only allowed to have 2 violations, and one of the drivers has 3 violations, but they everything else looks good, then they want to try and get that approved. It has to go up through management, and all of
Wow.
this stuff takes time. You know,
Wow.
so if from the insurance broker, if I could dictate the prices and I could dictate the time frame, I would have every account that I've ever talked to. I would be sitting on my yacht right now talking to you, but that's obviously not the case. You
Absolutely.
know.
No, I really appreciate that. So it all boils down to, man, like I said, in trucking, you need that true partner. You need that giant to stand on their shoulder that can help, because as a truck driver, you don't know everything. So it's very important to have a partner, a broker partner like you, to kind of help drivers facilitate that entire process. You know, any companies is like, hey, look, man, how do we get a true partner? And I'm going to ask that question later. I'm pretty sure our audience probably going to want to get in touch with you. I'm pretty sure they have questions. They have truck that they want to insure. So I'm going to ask you that question later where you could give them the information. Let's get to the last question. Is there anything you wish truck entrepreneurs knew before they get into the trucking business? What would you tell them?
Yeah, so something that I wish I knew when I was a trucker, and it was something that I really didn't start realizing until I got involved on this end.
Mm-hmm.
There's a few different things. One, the riches are in the niches.
Mm-hmm.
So if you're a specialized carrier, if you're, say, a last mile carrier that specializes in delivering high-end furniture or high-end cars, or something that not everyone is doing. The profit margins are usually, from what I see looking at everyone's balance sheets, are usually a lot higher on that end. And understanding how everything is affected. So really, if you don't have good safety scores, you'll probably end up out of business at some point, especially if the economy goes on a downturn. Because granted, you see the money in trucking. The trucks are generating, about $150,000, $160,000 a year per truck, but the average profit margin in the trucking business is 5%.
Mm-hmm.
So you have high expenses, and you have big assets, and the profit margins are thin. So understanding the numbers, understanding how to reduce those costs, which starts at the risk management perspective. So if you're an owner operator, really making sure that you drive that same truck every day, but you know what? Every day, do that pre-trip. Actually check those lights. Actually bring the truck in for service to make sure that the slack adjusters and stuff are working. There's a ton of technology that's really useful today, where a lot of this stuff can be automated. So having all of that is really what's going to make the difference, whether your company's successful in the future or not. Because I've seen so many trucking companies come to me at the last minute where they can't find insurance, or the insurance pricing is just going to be too high for them to stay competitive. And what do? They'll try and cut workers' comp, which is going to put them out of business and put everything they own on the line. They're going to cut maintenance, which is only going to make that problem worse. Or they're going to end up paying the higher price for insurance and end up out of business in a few years. So risk management is first and foremost. And it really is going to dictate the price, because in New Jersey right now, best in class pricing for auto liability is about $8,500 per truck.
Wow.
And I've seen up to $40,000 a unit on the auto liability.
Wow.
So there's a huge difference in delta, and having $40,000 a unit pricing for insurance versus a guy that's paying $8,000. How do you compete against him? Right. So running a good operation is something that, the proper risk management professional can help you with. And it's also really going to add to your bottom line and make you bring home some of the money that you're out there killing yourself for.
Man, thank you so much, man. I feel like I'm in good hands, man, with Fleeting with you, working with you. Like I said, we have a true partner, somebody that understands the space. But Robert, I'm pretty sure our entrepreneurs, owner operators, probably would love to get in touch with you. Are you okay with sharing your information, your Instagram, your Facebook, your LinkedIn? What information you would like to leave with these drivers?
Yes. So you guys can find me on LinkedIn. It's Robert Hayley. Feel free to give me a call. I'll give you my personal cell phone, which is 631-335-6844, or you could send me an email at robert.haley@usi.com.
Can you repeat with that one more time, if you don't mind?
Yeah, so it's Robert, Robert, period. My last name Haley, Haley @usi.com, and my cell phone 631-335-6844, and it's Robert Hayley on LinkedIn. I usually try and post videos a few times a week of things that are happening in the industry, things that may help truckers save some money, and help reduce some of their risks in the business. Which I think are helpful, and a lot of my colleagues have found that they're helpful as well. So feel free to follow me on LinkedIn and watch my videos.
Thank you, Robert. Really appreciate it, man. I think this was very helpful. I'm definitely looking to see, maybe at least we need to do that, especially with you, at least once a month, if you don't mind, or once every other month. Because like I said, this is a huge problem. Truckers talk about insurance all the time. So I always want to be able to stay in the loop, always be able to be ahead of the curve and bring them the right information. So we'll definitely welcome you plenty of times to come on the show. And as we're working as partners anyway, and thank you for all that you've been doing for our team. We really appreciate it. Very valuable. And thank you for making the time with us today, man. Thank you.
I appreciate it. Thanks for having me.
Thank you. Have a good one. Enjoy.
You too. Thanks. Bye.
Everybody, peace. Trucking Weekly. Take it easy, guys. We see you again next week, Thursday at 7 p.m. Peace.